Okay, hello everybody. Welcome to Korean Atlanta Mentorship. So in this video, we're going to talk more about velocity banking. We know from other videos that the best tools to engage in velocity banking is some sort of a line of credit. Now, there's different types of lines of credit, such as personal, business, home equity, and even credit cards count as a line of credit, although there are nuanced differences between a credit card and your typical line of credit. Now, before I start, I want you to I want to give a disclaimer that this isn't financial advice. If you're considering doing the things that I talk about here, talk to your appropriate financial or legal counsel, anybody who has the appropriate licenses. In fact, let me just do this with ChatGPT. Please create a disclaimer for my YouTube video that I am not giving financial advice. Right. So as you can see here, not financial advice. The content provided in the video is for informational purposes only. I am not a licensed financial professional. All investment involves risks, blah, 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 blah. And you can see the disclaimer right here. So now, if you've never heard of Velocity Banking, I'm going to go ahead and put some links down below. Velocity Banking 101 and also Velocity Banking 102. If you've never seen those videos, go ahead and click those first. If you have no idea what that is, I'm talking about, basically all Velocity Banking is just a way for you to quickly pay off your debts, not pay as much interest as you normally would, and also maintain liquidity and control of your money without really changing your lifestyle. So if you haven't seen that video at all, go ahead and click the link in the description, come back here, and then review why in this video you should use both lines of credit and credit cards as your velocity banking tools, right? So here, let's come up with a list of advantages and disadvantages for lines of credit and credit cards. So typically, a line of credit has a lower interest rate than a credit card. So let's say lower interest rates. So it might be as low as maybe, it could be 0%, but that's true as a credit card as well if you're in an introductory period. But let's just say low as 10% and then maybe go as high as 15 or 16. And again, it depends on your bank, right? So if you want to see how much interest they're charging, always look at the bank's agreement terms or even call the bank's representative. And you'll find that in general, lines of credit have lower interest rates than credit cards. What's the second advantage? The second advantage is that much more liquid. So for example, let's say I need $10 of cash tomorrow or even today in my bank account. All I have to do is just click like 2 buttons on a website and I'll get like $10 in cash, right? So it's much more liquid and you can decide and so much more flexible in what you can pay. So you can pay off anything because it's literally just cash going into your checking account. And so even if you wanted to, let's say, pay off the line of credit with the same line of credit funds, you can certainly do that. Whereas with a credit card, you certainly cannot do that. Now, let's go to the credit card advantages. Let's just do a quick discussion on what the advantages of a credit card is. Basically, you don't have to pay interest if balance is paid in full, right? So if you don't carry a balance, then you don't have to pay any interest on the next month. And that's like the best thing that a credit card has over your typical line of credit. Because let's say I pull out money today, they're pretty much charging me either today or the next day interest, whereas a credit card, you might have like a floating month period. And let's confirm this with ChatGPT. When does a person not pay interest on a credit card? Okay, so basically it says right here, a person typically does not pay interest on a credit card if they pay their credit card balance in full by the due date of the billing cycle. Whereas for a line of credit, in my experience, that's not true, right? So let's go here, and we can put that as like a disadvantage of the line of credit. So let me just put that here. Let's just do this. Okay, so the line of credit disadvantage, interest charged as soon as money is taken out, right? That's like the biggest disadvantage of the line of credit that I can think of right now. Credit card disadvantages. So we can just kind of decipher, if we look at the advantages here, whatever the advantage of the line of credit is, that's kind of like the disadvantage of the credit card. So let's go ahead. Higher interest rates. So maybe it's typically, from my experience, 15 to 30% interest, right? And then number two, not as liquid. So for example, cannot pay another credit card or loan except under and if you can do this, but there's a few exceptions. So usually you can pay off another credit card with another credit card if you get a balance transfer offer from the credit card company, and you can pay off a loan using an intermediary service like Plastiq.com or plastic with a Q.com, right? But if I want to have full access to my money, I'd use our typical lines of credit like personal, business, home equity lines of credit. And if I'm not able to do that with the credit card. Now, the reason why we're going to use both. We're going to have all the tools available in our arsenal. And here's the thing. When do banks allow you to borrow money easily? It's when you don't need it, right? So if you make good income and you don't need credit or to borrow money right now, that's really the best time in general to go ahead and apply for credit cards and lines of credit, because the moment that you need it, they're likely not gonna let you borrow money, right? And it's not 100% true for the most part, but it is. So basically, we want to use both. We want to use a line of credit and a credit card, and so that we can take advantage of the best of both worlds, right? So let's think about this, right? If I use a credit card for most monthly expenses, and I know I'm able to pay it off every month, or maybe I'm already using a line of credit, but I know that in part of my calculations as I'm doing velocity banking, yes, I charge the credit card for my expenses, but I pay it off at the last moment just as long as it pay off full, right? So pay and then just paid off full. How much interest did I really pay on this one? I paid, that's essentially 0% interest if it's paid off full. And the next advantage is that you might get little perks and bonuses. So perks, bonuses, so you might get like the cashbacks and stuff. And not only that, you get to delay interest, because even though, let's say, you know, you're paying off your expenses with the credit card, you may have some debts tied up with the line of credit. And so what you do is you use a combination of the line of credit. So you use the line of credit to pay off credit card in full, right? So maybe you're doing velocity banking, $50,000 or $30,000 off the mortgage, and part of your equation of calculating cash flow includes using the credit card and the line of credit. So your line of credit would be the main tool, and then you pay off your expenses with the credit card. So instead of immediately drawing upon your line of credit the moment that you need the money, you use the credit card to pay for your expenses. You pay it off with your line of credit, but because that line of credit is going to be taken out much later, or the money from the line of credit is going to be taken out much later, then you would essentially decrease the amount of interest you would typically paid than had you paid your expenses directly from the line of credit. So I hope that makes sense, right? So really, the reason why you want to use both tools is you want the best of both worlds. You want to take advantage of the lower interest rates, But at the same time, you don't want the interest charged as soon as the money is taken out. So what you're going to do is, or what you can do, I'm not saying you have to do this, is that you use a credit card to pay for a lot of your expenses. And then as you're doing velocity banking, then you take out the money from the line of credit at the last possible moment and then pay off your credit card in full if you can do that, right? So that's the beauty of using both. So again, get the best of both worlds, use the line of credit and the credit card, use the advantages of both so that you're not charge interest as soon as, so you're not directly charging to the line of credit. And also you're not paying the higher interest rates because once you pay it off in full, then there's no interest charge to using the credit card and you might get those perks and bonuses. Okay, so I hope that made sense. But yes, you should have both of these in your advantage. One is not necessarily better than the other, although I would prefer having a line of credit over a credit card, but just be aware that there are advantages and disadvantages of having both. And if you have both tools, then you could combine them in a synergistic way to take advantage and not have to pay as much interest. All right, so this is Crane Atlanta Mentorship. If you're interested in joining our group, and I'm always going to make a plug for a group at the end of the video, go ahead and click the Google form link below, or click the About Us page in the YouTube, in our YouTube channel. You can find our email address there, and go ahead and feel free to send us an email there to say that you're interested in joining. All right, so have a great day, and we will speak next time.